Hello, everybody. Welcome to our first market conference, the 3 Talk series. All right, 3 Talk series, and the real focus is to help you how to find the right opportunity. That's right. So 1, 2, and 3. That's all we want to do. So this Saturday, next Saturday, and so make a date with me. All right. Okay. If you don't, you can still watch all the tutorial out there in YouTube. No problem in there. I think more important is we try to compress, what's really happening in the world, the post-COVID, before COVID, and something that you can understand that you can even explain to your children. I think that's more important. The education that you give to the youth, I think that's very important too. So again, together with Smart Robie. Now, how many of you are first time listening? First time. If you are first time listening, type 1 there. If you're first time listening, do type 1. Then at least we know we are reaching you out, and also the Smart Robie, something that really helps you in there. If you don't have Smart Robie, do download a copy of Smart Robie here. Next week, we'll touch more on Smart Robie. Today, I have 2 of my also very good coach and trainer, Zach. You all know Zach, and also Arif, which featured on Thursday. He talked about CANSLIM. Those of you who don't know what CANSLIM, I will talk about it today. All right, so let's get started. All right. Now, of course, those of you who are first time, you do know, do join our Telegram chat room. It's a free stock market. That's a QR code. You can take photo. And thank you very much. We are going to hit our 5,000 users in there. And because many of you come and you all want good, solid content, not the rubbish type, good, well-researched, well-thought through. And I'll try to bring my 20 years experience into giving those content to you so you can benefit too, and really go out and think. Be a thinker, not so much be a I follow you, you follow me. There's so much of this herd mentality. So do join our Telegram group where we focus on this part here. All right. Now, also don't forget this video that you see will be uploaded also to YouTube. I think you can see from here. Let me just bring this. My laser pointer here. Yeah, that's right. So I'll put on the laser point. You can see even last month we talked about Kosan, rubber, and super glove, and we talk about Plantation, isn't it, on Wednesday, right? Plantation started to move. Have you got your Plantation shares? All right, have you got your Plantation shares? Okay. If not, you can follow me on the breakfast show, as well as Zach at 9:30, and mine will be Monday, Wednesday, and Friday. So we'll talk about all those. So today, just merely touch base on the real economic sense in there. So we really appreciate. Oh, hi Nigel. Okay, good. This is where we're going to move on. Okay, do something. Now, don't forget we have our Smart Robie. It's all KLSE investing essentially in one app, and how you want to sort of use Smart app to help you. And we got a lot of great picks from Smart Robie, Kelly, Versatile, even one of the really good one I did share on the UOB Kehyang talk was the Bio Alpha. We got hold of Bio Alpha even before they were awarded the news. I think I personally know the CEO of Bio Alpha. I think Nigel also introduced me to the CEO of Bio Alpha in there. But that we keep that for another separate talk altogether. Okay? Because all right, let's go on. Now, do take note. Now, Smart Robie, of course, is free of charge during after office trading hours. But during the time that you want to use for all those premium, do share Smart Robie with your friends, and you'll get 200 credit every time with your share a friend. That's going to be good. All right, let's focus on a closer look on the market, how I see things, how I talk to the researchers, how I talk to the market, and this is what's happening right now. Now, this is on this morning in here, the thrill to trade. That's right. Now we see not only in Malaysia, we see this in Indonesia, Thailand, Singapore, and US. Do you know in US during this COVID-19, almost 1.5 million account was open, and the same also happened to one of the online traders. All right, I think no name mentioned. Let's start with the R. Now, how many of you from the R? R side, okay, start with the R, and they actually opened up almost close to about 50 or 60,000 accounts, number of accounts during that same time, which normally take about a year or so. So that has really created in sort of an issue what we see today on the market, because a lot of people just jump in, and we all know why they jump in, right? Rubber glove. That's right, rubber glove. So I'm going to talk about rubber glove too in here. So because of the thrill of the market that everyone's talking, all the retail investors are back. So the news really talk about comparing what's happening now to the last boom that we have. Anybody remember what's the last boom that we have? Just type it in there. If you remember the last boom that we have, right? That was the 97, 98. That's right. You remember the 97? Yeah, no, 97, 98. Yes, 2008 also the same thing. Yes, that's correct too. Those of you who are listening in here, because I got two sides of thing. The get response guys are great, and then we have the also on the Facebook in here. So these are the two areas that they're looking. So what the article did say, I think many of you would have known, is that for most part of a KLCI going to where it is, it's 1590, right? Hatta Lega and Top Glove, these two shares are responsible for 160 points on the KLSE in the past few months. I think some of you may know. If you don't know, this is one of the real concern that what we're talking about in the market today. Because of this, we are seeing that the market is pulled back a bit right now because of the market bullish. No doubt the market is bullish. We are seeing a lot of news of vaccine, but vaccine is not good for rubber glove. It's not good for Top Glove. It's not good for Hatta. It's not good for Kosan, and it's definitely not good for Supermax, which afterwards I will analyze very quickly on this part in here. But just sort of bring up the atmosphere a bit so you all know the kind of condition where we are. So a lot of the volume, like it or not, is really created by a lot of the bullishness that we see in here. So the news article really talk about the news of the vaccine, which really drive the lower rubber prices. I do have some of you members who are listening right now, and they do ask me, can buy rubber glove or not, right? I told him, no, why do you want to buy now, right? That's always the reason why. Why are you so late? Right, you have to look at the underlying too. A lot of time, investor emotion comes into play. The friend bought it and you don't bought it. And if those of you many of you are the top fans of TradeVSA, also using Smart Robie, you probably have been following me and you kind of know. So what we try to make a lot of the information in here fairly simple, right into like bit size that you can take home and really understand. So that news I already updated earlier on. So what is also happening in there? No doubt that the news on the vaccine are drying up, but WHO did predict like a full workable vaccine, for everybody. Is still a long way to go. Now they even talk about the price. It's around $40 now, right? Because I think Pfizer has signed up a deal with the Trump administration to buy almost 100 million dosage in there. So the market didn't rally. Actually, the market didn't rally. You see a lot of pullback, and that leads to the next slide, which I'm going to talk about here, which. If you look at it, the KLCI has really run out. And this is what we talk about here. You see, this is the KLCI and here, but you notice the small cap stock hasn't run yet. So the story behind simply is saying, look, you got the large cap, Top Glove, and Top Glove keep coming up. Even Top Glove now is as high market cap as Maybach. They are already up there, and you can see this is why the blue line here, okay, the blue line is the KLCI. So the KLCI is outrunning everybody just because of the rubber glove, right? That's right. I have made a fair bit of money for my clients. I got some in Singapore. You know, like Singapore, what are the rubber glove, right? They have Top Glove, and the other one is AP4. AP4 is reverse tone, which I know the CEO Wong guy, and he's the brilliant guy. I bought it some time ago lah. Anyway, it's I just one of the shares, but later on I will talk about rubber glove later. So because of what it is 160 point that they push up the KLCI. So a lot of analysts, I think some of you who are listening, right? Yeah, no doubt with the vaccine, they still need glove, correct? But they need less. And that's why it's tapering off. So is it a time to short the KLCI? So the news is also a lot of the analysts who, actually many of the people who listen here are also analysts. And you are also analysts too. Because the highest year end for KLCI is 1580, right? Which is, we are here now. So naturally, people saying, hey, we're already there. And we got like 7 months more. And don't forget, we have the 3rd November, 2020. What is happening on 3rd November? It's the US election, right? Which I did talk about it 2 days ago, the US election, about either Democrat win or the Republican win. But I will do a special segment purely for you guys to talk about the dynamics between the Trump and the Bidens, what are things you should watch out for, and we'll leave it in one of the Wednesday session too, so you keep you updated too. So along the same line, so analysts do see a major decline or mild correction. I hope it's mild, not major one, correct? Not major one also. You and me, so shaking a head. Mild is okay. I think many of what you're like. Do you like a mild correction or major decline? Just type it in there. What do you like? Mild or major? Okay. Which one you all like, mild or major? Okay, yeah, let's hope for the mild one. Mild, I can go and pick up more, isn't it? I think you all also want to go out and pick up more, isn't it? Okay, all right. That's what we do. We want to have a mile here, and then we can pick up more. Okay, so the question that remains, which people talk about here, is because of this buy on rumor and sell on fact strategy. Okay, buy on rumor means this once the news of WHO release, right, and then you see the last experience. I did talk about this in the on the talk on the rubber glove one was 2003 SARS. And this is actually a good information that I got hold from the UOB. They have great analysts in there. I think this morning they presented also, some of you may have attended the UOB half-year segment, and they feature Julia, which is a very good economist from the UOB Kehang, and also Vincent and also Desmond too, both retail and institutional research too. So they're pretty good stuff inside. Do follow the U-Trade UOB, and they do. I learned a lot from those seafood there. I'm not really a seafood. I'm more the guy who's more practical, a technologist guy in here, and then we started with Smart Robie. Okay, so let's look at the fact which is today here. The economic, Malaysia economic to grow 7.5% in 2021. That is a fact. This was on June. Now, why is this important? Is because a lot of time we have been focusing a lot on what has happened. The past is the past. We have to make money going future, and that's what we talk about today, which is the next trend for 2021. So in here, the PMI has surged back up from a very low, which I'm going to share with you here. All right, the figures from here. This was the post-COVID. You can see the of course, post-COVID, during the COVID, everything shut down, isn't it? Except for the chicken slaughterhouse, the supermarket, everything shut down. Right, even constructions shut down. So that's why you saw the manufacturing dip. This is the most important things in Malaysia, the moving parts. Okay, so the moving parts is already been sort of slow down, and then it surged back up to 51, right? Now, economic boom, usually we get to 54 or 53 of our PMI. PMI are usually considered as a purchase manufacturing index. It's more like your speedometer lah. Speedometer. If you dip below 43, 40 something, then or no petrol already, you have to be careful. All right, so always look at this as one of the leading indicator, but usually that reflects on the stock market. PMI, you can get it from tradingeconomics.com, and it's totally for free. This is where I get my information. But more importantly, let me just read the news, summarize, and just give it to you. I think that's more. Now, some of you don't have sound, should have a sound. Please check it again. All right, okay. So that's why the PMI has surged back up to 51%, and to me, I think that's very important too. 51%. That tells you the market it's going to be sort of ready to move up. But if you can get above 55, that would be great. Okay, get above 50. But that's all going to depend on what's happening like right now, like we're seeing here behind me, the news that you see what's happening in US too, which I will give you an update. That will be the 3rd of November 2020, the election. So what do you think? Is Malaysia going to be on target to hit 7.5% in 2021? Please type it in. If you think 7.5, 6.5, let me know, okay? While I have a sip of water in here. Do you think we're going to hit that? 7.5. Good. You have to be optimistic, to be frank with you. If you are an investor or trader short term, it's also good. You know where you're going for. Yeah, 7%. Great, guys. I really appreciate you in there. And okay, 6 and above. Yeah, we are doing. Especially many of you who are typing in and responding also agree. Like it or not, even if they have the vaccine, you still need gloves, isn't it? I mean, you put in administer. Now remember, let's say in US got 320 million people. Let's say 1/3 of the people are. So that's what they bought 100 million, Donald Trump buy 100 million dosage, right? So 100 million dosage, at least they will change gloves, isn't it? Right? Because they want to inject here, correct? So still need to use rubber glove, but cannot be so sensational. So right now, top glove, Hata, Kosa, all pull back. So it's important that you study those charts. You study those charts and learn how to buy on the pullback. Right. You don't want to buy when it starts shooting up. You want to buy when it's on the pullback. And learning, I think many of you who are members who have attended our masterclass, I think you all learn those. Those who you don't, you can also pick some of those things from YouTube or from other seafood, which also can help you too. All right. So let's talk about the history of the US bull market and bear market, which is important. In the perspective, not everything go down. They will also come back up. Okay. So if you look here, on the COVID-19 perspective, way back into back to the history after the Great Depression 1932, this market has go up and down, which I will show you on the next chart. So you can see here, COVID-19, we went down almost 45% in here. And notice, right, here, which I want to draw your attention, because the bear market usually are very short, especially when you have crisis like this, the COVID-19. But this is one of the worst hit if you compare to the Spanish flu, it hit the US and also the rest of the world in 1908, I believe. 1908, that was the Spanish flu hit. And because of the resistance, Donald Trump to impose mask wearing and all this, that's why we saw this prolonged thing. And also in Malaysia, you all know, starting 1st of August, we all have to wear masks. And yesterday, I think that the case went up to 25 cases in there, and we are still not out yet. You know, I actually booked my holiday already. How many of you have booked your holiday? I booked my holiday already with Air Asia. Then Air Asia sent a need, we have to cancel your flight. Wow, how many booked your holiday? They just type holiday inside there. Okay, just type holiday inside there. Okay. That's right. Need to take time. Correct. There's some of those comment in there. So this is what we are seeing also. Okay. So I could go for my holiday. So the point is, I made a comment on March 25, which I've been doing since the COVID, and right now it's July, almost 4 months later. I've still been doing this. You know, it's like being at home. I can go to the office, but I still want to share some of those information that I did say a U recovery will be coming. At that time, people are talking about KLSE going to 900 because they couldn't see the bottom, but I have information like this. I have research like this. And that's one of the things that we try to do at TradeVSA, to share this information with you absolutely free, no charge, so you can understand what we're going through. All right. So in here, so first today on the same topic, I'm going to talk about trends. So that sort of gives you the overall perspective, you know, what has happened and what is going to go forward. But let's talk about recovery, the post-COVID-19 recovery, how it's going to be looking like. Okay. So if you look at the, this is from McKinsey, one of the big consulting houses, which I respect a lot, because my background is also from the research consulting. And you can see market capitalization has declined all sectors in here. Right now, you can see your oil and gas, aerospace. This is a lot from the US perspective. But I'm just going to draw some example going back to the Malaysian example in here. But what's more important than all this, you can actually categorize to these three things. Right, let me just share with you in here. Now take note now. Three things we need: the sectors, very important, the cyclic sectors, the moderate cyclic, and the non-cyclic. So I know they got a lot of A, B, C, D, E, F, G, H, I, Z, but very difficult to understand one. Correct. So you categorize into the moving parts. One is moving, one move faster, and one don't move at all. So that's why we have three examples in here. The non-mover one are the non-cyclic lah. This is the one lah. Right, the non-cyclic one, okay, usually are like, you know, a bit defensive. Then you have the moderate cyclic, that's the one moving, right? And then you have the cyclic one that's really moved with the economics, especially finance, you can see right now. Okay, so once you understand cyclic and non-cyclic and moderate, then you kind of sort of say, hey, does this sector that I'm buying this stock, which I want to hold for a year. Some of you may don't want to hold for 5 days. I do know our 9:30 session, we kind of focus a lot on holding 5 days, 2 months, because people are very scared. Correct. You also is scared, right? You really don't know, this COVID-19. So one of the things that we try to do here is to give you those perspectives that you can really understand and take home with. So cyclic, non-cyclic, which I'm going to break down further for you. All right? Is that okay? So far, is my speed okay? If my speed is okay, give me a thumbs up, okay? So I tend to get really, in the mood because, I've been researching this for the whole week with my team, and we want to, give a really good, information in here. It's good. Give me a thumbs up, okay? Thanks a lot. All right, thanks a lot. Okay, let's move on. Thank you. Okay, so sectors that going to recover back again from McKinsey, very, very good researcher they have inside there. This again from the US perspective. They did say, look, the things won't restart like automotive, oil and gas. It's going to be, Q3, Q1, Q2. You can see the longest one will be the aerospace and defense. Air travel, first quarter 2021. Now, even Boris Johnson is in US is trying to say convincingly they would have a normal life in 2021. What do you think? Do you think we will have a normal life if we can travel? Although today, the tourism ministry in Malaysia are talking about the green bubble, that we can travel to Thailand, we can travel to Singapore, Brunei, all this. Wait, what do you think? Do you think when can we travel? Right, 2021 or October? What do you think? Just type it in there, okay? All right. What do you think? Because I also want to travel like end 2021. Because sometimes we call it the crowd wisdom. You know, crowd wisdom where everybody sort of agreed. And there is some sort of crowd wisdom in here. 2021, not end 2021. I don't want to travel end 2021. End 2020 or beginning 2021. I want to go holiday now. Even if I go holiday, I'll still do something like this. You can still watch me whether I'm in Bali or in Thailand. Right? New normal. That's right. Eric said the new normal in here. Okay, so back to the next slide. Now the next slide really talks about what is really important is you're gonna so now we know the economy, Malaysia economy is gonna agree to recover. Many say already, right? 7%. It's gonna move up 6%, 7%. So which one do you use? Top down or bottom up, right? But again, I'm trying to train you to think like an analyst, so you would know very sensible. When you read your newspaper, when you read your Star Business, when you read your Age, or someone tell you in a coffee shop, you also know, hey, I use top down, or I use bottom up. Which one do you think right now? We knowing the economy recover, top down or bottom up? Please type it in there. Okay, top down or bottom up? Right, because I want to know, so far you're understanding the material, and I engage, that you're really understanding top down or bottom up. Okay, if many of you type bottom up, I need to explain again. Okay. All right. So that's okay. Good. Many of you got it right. Top down is the right answer. High five, high five, high five. Give me a high five. That's right. You guys got a high five, high five, high five. All right, high five. The right answer is top down. That's right. High five, everybody. Give me a high five, thumbs up. That's right. High five is the right. High five is not the right answer. Top down is the right answer, and high five is it. Okay. Now why? Because you know the economy, right? Just now we're saying 7% economy. So where are all the clues coming from? The industry and the company. So once you know the economy is recovering 6-7%, then next one you focus on the industry. Then you say, hey, what industry, Martin? We're going to get down to it. So it's no rocket science, isn't it? Why the market recover? It's no rocket science. If you think right now we got another 6-9 months to recover, the thing is going to go up. So this is where a lot of people are very confident. They are taking money out from their fixed deposit and buying some of those sort of beat up things. Don't chase. Okay, that's important. So if you look from what this famous investor, you all know, right? Warren Buffett, right? So Warren Buffett, this is what he would likely think, and he will also advise you, don't simply follow people They say buy this, you buy it. I need that is shortcut I know many of you do that. I know it's very confusing and things like that. I just follow yeah. But it's also important that you understand. So one of the things that if you're going to follow me or follow my coaches or follow my trainer, but also understand the economic top-down approach, the event, and then we only approach to the security interest. All right. So this is what you do. You focus, like what you do, we focus on 6%. We focus on the sector. That's why next Saturday, I'll talk about those stocks. Okay. So now this is a part where you will see non-cyclic, cyclic, and moderate stocks in here. Okay. Yeah, Richie said, okay. So here, where we look at the different sectors inside. Just now I talked about the non-cyclic, right? The earlier slide. So here, the real focus, right? We're not going to go into the non-cyclic because of the time that we have. If I go through this, all you will be sleeping. Very boring stuff on this one. I want to focus what is the essential in here. And so next week, we will talk about those stocks. No doubt today when Zach does his session, he will talk a bit about those stocks. And also my coach Arif will touch on those Malaysia-centric. Because some of these US don't have. Malaysia only got it. So here, the moderate cyclical, that's the one, right? It refers to a lot of digital products, right? Now, why digital product? Anyone can tell me. Anyone? Why do we talk about digital product right now? Like Zoom, like Skype, Cisco Webex, okay? E-commerce, okay? PayPal, we talk about revenue. Okay, why those? Okay, because we cannot travel. That's why I wanted to go for holiday weekend. So a lot of them are digital products. Used to be, they're quite volatile, but they kind of follow the economy and the trend. And a lot of them are what we call fashionable essential goods. Now, fashionable essential good is a lot of the digital product that we have. They all have expired technology. Okay, you know what I mean by expired technology? Expired technology means, that's right, WFH. Expired technology means a lot of them 2 years only. You pay 100 ringgit or 200 ringgit for your phone. After 2 years, show kong already, you have to buy another one. A lot of those people designs, or they do a subscription fee. Okay, do a subscription. There's no such thing as a free lunch. Let's do it that way. Same thing also like us TradeVSA. We also need to survive. Our coaches, and sometimes some of you do sign up for our programs and our software. Very happy. And those of you who are not ready yet, continue to watch free. But we hope one day, if you do want to buy, you buy from us. That's right. Okay. So at least, we try to service you and try to explain things that you do, because we feel that anything that is digitized, product or services, you will need it. It's just a question whether you get it from A or you get it from us. All right. So a lot of technologies is that you have 2 years, 3 years, no more than 3 years. Like my phone that I have, I'm looking for the next phone to change it. That's why the iPhone 12, which is going to launch, which is the 5G, which I'm going to talk about here. So the mobile streaming, a lot of them, and those are what we call the merging technology. The merging technology is the one that you guys should really want to focus on that part here. Okay, so the merging technology, video conferencing, that's right, yeah, video conferencing. So a lot of the digital products are doing that. So if you look at again to the economic cycle in here, just want to cut it short for you in here. I know there's a lot of moving parts, growth in here. Here, what you've been taught in school or in economics 101 when you go to university or you do your PhD. So they're still going to tell you it's going to be focused on cyclic growth stocks. That's right, cyclic growth stocks. Okay, and that's the portion in here. Now, in our Bursa sectors, we have a very simple way to tell the supply and demand for the share sector now. And some of you may have seen this before, which I always flash in. And you can see right now there are four areas. Okay, you want to take a camera and take a picture of this. Please do that. And for our members, TradeVSA, you probably have this, and this get updated. We also have a new one. Perhaps Zach might want to show you our new interface for a Bursa sector analysis. So take a picture of these 4 sectors here, which I think good. Some of you will say, hey Martin, how come you don't choose healthcare? I will talk about healthcare later, but I'm talking about merging next round. Technology, plantation. Why plantation? Because Malaysia has a crude palm oil in here. Right? But technology, crude palm oil is more consumable kind of thing. It's just that, EU is hitting us. China and India are not buying, but they are replenishing their inventory now. And then consumer and industrial products. Okay, oil and gas, unfortunately, we have to give it a miss. It will be temporary short time, because every time when the oil prices goes up, right, the shale gas producer will come, or the non-OPEC. OPEC are the Russians and the Saudis. Okay, they are the OPEC players. Then they will sort of ramp up the production, then oil price come back down. Because when crude oil goes up, our palm oil also go up. And that's the reason why we're seeing plantation right now. Okay, so just take note, this is just some relationship we have inside there. Okay, so okay, this is another slide you want to take, is the post-COVID 219 F2021 economic recovery. This is what I think the rule of engagement. Okay, so we have seen, first of all, the economic will be expanding, number one. Okay, so when the economic expanding 7.5% in 2021, which is not far away after you hit the November, which is election, and we might get a GE15 snap election. Now, how many do you think you're going to have an election by November? All right, there's a lot of rumor talk. Okay, I'm ready for that. It's just that the last 2 weeks they were talking about GE15. How many think we're going to have GE15? Type it in there, GE15. Right? I think so. We will have a GE15. No, because of the current crisis that they have in the parliaments that still haven't solved yet. So we will have an election, and whoa, that will be interesting, man. US election, Malaysia election, and economy recovery. No GE, please. Yeah. Some people say no GE15, they cannot sleep, Oh, the last GE14 also cannot sleep already. Correct, no, right? Well, if we do have GE15, we will cover live Facebook, okay, on that day as the result comes out, and then we'll probably do a talk show. That'll be nice, isn't it? Right? Okay, so let's go back to the rule of engagement for the COVID-19 in here. So usually the recommendation is when the economy is expanding, we take aggressive growth stock strategy. How many of you like that? Okay, that's why I show 2 pictures there, the younger and Warren Buffett, the 2 older one. Now, how many of you would like to have the aggressive one, or just type growth, or you just type stable? This is the only way to go. Okay, just type in there. Okay, you want the growth or you want the value investing type? Because some of you are different. If you're generally older, okay, you might want to prefer the Warren Buffett way, the value one. But the younger one, like this girl, you want to take the aggressive. Type it in there, those of you who are also listening from Facebook. It's also good to know the growth and the value investing. Both of them come because the technology will drive through 3.1 and 3.2, which is over here. All right, 3.1 and 3.2. I hope you all choose it correct. But anyway, towards the end here, I will share with you those strategies too. I think in a couple of slides, I will share those strategies in here. But I want to get on to 3.1, which is here, and 3.2. Why there are so much opportunity inside there? Okay, what example of growth stock? I'm going to go into that. Those growth stock I will cover next week. Today, just try to understand the reason why the sector can grow. I think that's important. Once you understand why we need to eat, you'll probably buy Milo, isn't it? Because Milo, a lot of sugar. But that's beside. But I'm trying to teach you guys, let you understand the underlying, why the market goes up. I think that's more important. Okay? If it's okay, give me a thumbs up. All right? I really appreciate that. Okay. Growth. Sometimes growth cannot be stable. Growth, you see, like the COVID also come down. Just take over. I think growth will be the one, right? Okay, let's go. So we're going to talk about the next slide, the emerging technology. You can take a picture of this. This is good. It's something that you can continue to flash on. Here, we're going to talk about the Malaysia Bursa centric. Not all stocks you can buy. So this is the one I talk. In our masterclass, I'll talk about the US market because I do see a lot of market recovery coming in US. My big take is if our market tank because the retailer finally give up because of the moratorium. Remember, 30th of September, which is end another 2 more months. The moratorium will not expand, will not be extended. So there's a big concern because the moratorium is not expanded. So people will take money out from the stock market, which they're supposed to pay the bank loan, and then the market collapse. That's the one I'm very worried also. Okay. If they're going to have the election in November, October, some of you put in November, right? Harry put 50-50, but Harry will talk more on the masterclass. You and your wife is coming. So, okay, good. So you can see, if they have election in October, November, then the 30th September moratorium will get extended. That's just kind of good. But if they don't extend the moratorium, but then again, don't worry, I will still be there. We will still have another session like this to get you guys up and started. But from the technology that you see in this chart here, right below there, we have 5G, okay, which, some of those companies, I'll talk about next week again, the cloud services, the Internet of Things, all right, the Dysons, a few of them in Johor, isn't it? All the plastic makers, or they call it the OEM, okay? Then you have the AI, and Smart Robie definitely falls into the artificial intelligence and also the electric vehicle, all right, also important too. So, okay, we don't do much, but we do. Now, like it or not, in Malaysia, many of our companies are industrial products. They make small components. Metal stamping, CNC stamping, that's a lot more in there. My last visit to one of the company, I'm not going to mention here, next week I will talk about it, it's very interesting. Actually, it talks about, one of the IoT product. Now, you can see here, anybody know what is this product here? This one. Anyone? Okay. Just type it in there if you know this product. All right. Just curious. Okay. That's a Dyson fan. Now, the Dyson fan, the CP04. I was told the CP04, it's a very intelligent that connects to your handphone, right? And tell you the pollution in the house, right? Yep, CPO. And you know how much the fan costs, anybody? Right? How much you pay for a normal fan? 25 ringgit. How much you pay for that? Kipas, that's right, Ricky. Around the CP04, you just type Dyson CP04. Yeah, super expensive. You're right, man. It's 2,300 ringgit for a fan. You can buy how many aircon? Now aircon average $800 plus installation 1K. 2 aircon, no? Yeah, 3K, that's really a Dyson. I got a Dyson vacuum cleaner, very good. I have to accept. But that is also because my sister used it like 7 or 8 years, right? And then, I bought it. How many of you guys got the Dyson product? If you have a Dyson product, type Dyson, at least I know, all right? No, it's about 2,300 for the CP04. That's the one that connects to your phone. That's what we call the IoT devices. Right now, because it's really expensive, and we all know Dyson products are very expensive, so it's really out from the beyond. But you go to US, 2,003 divided by 4, they can afford. But most Malaysian, I didn't talk about poverty lines. You say, cannot afford. Correct or not? In Malaysia, it's really a different case, man. Malaysian are really, everything divided by 4. When you go holiday, right? If it's when you go to US or you go to Thailand, not so bad. But Indonesia, not so bad. But if you go outside, Japan, you will feel the pinch. You agree on what I say? Okay, yeah. If you agree what I say, then that's why we say. So the emerging technologies, that's this So we can fight back. Bottom line is to invest in this sector, at least make back for the, for the money. It's those people who went in on the rubber glove early on. I think earlier we talked about it. Those you make your money back. Okay. So what we're trying to do, the message to you is simple. You make the money back from rubber glove, and this is not from me. This is from one of our members from the our TradeVSA. Yeah? And they said, look, I rotate out from the rubber glove. Okay. I know rubber glove can go higher, but I don't take any more risk because I am certain age. I take out, I move on to the next sector, and I'd like to hear what Martin has to say and what Martin has to offer. And that's why we talk about this. Okay? So let's go move on. So I did do one of the talks previously. You can see this is the 22nd of January, 5G. I already start covering very early in May. So this is a QR code. You can take a photo and you can talk. Those are the stocks I've talked about, but I will update next week. Okay, so those are the stocks we have. You can see we're going to hit 3,000 viewers inside that, which is quite a lot for us because we're not so active on YouTube, but we're trying to, because many of you are saying like, look, I can't find anything on Facebook. Do you have them by category on YouTube? Yeah, we do have. And one of the things that we try to do in TradeVSA, especially the younger generation are those in Instagram, and they are looking for information. In Instagram, you cannot find information. You can find a lot of nice photo, people, very sexy, eating here, makan here, holiday here, but now less lah, because of the COVID. So we're trying to, attract them. And the younger one, we really want to get them to start young, know the right trend and to know the right information, right? Science is very important, and not knowing, the economics behind it. So this is the one you can watch it if you like to, all right? Okay, so on this part, okay, now I'm going to ask you now, here's a clue, okay? This is the one I'm going to test you guys. Okay, this is a clue, okay, bonus issue, okay, I'll try to answer the one. Oh, hi, Peter. Okay, so this is good. Malaysia economy going to recover. What sector do you think will recover? I want to test you all a bit, little bit of testing here. Which sector you think will recover first in 2020? Okay, which sector will cover first? What do you think? Okay, so we have it now. One clue I'll teach you guys how to use. You look at the export. Our trading partners, China, Singapore, and not banks. Banks will take a long time. Banks. Okay, this is the export. Figure. I don't have. Apparently, the website don't have for 2019. I could only got hold of 2018. So you can see integrated circuits. That's what the Penang, the free trade zone, and also in JB. Okay, JB not so much because the Singapore are coming in. They build a lot more, but in Penang there's a lot of those integrated. The Penta. The Johor famous for two things, the plastic and the furniture city, Muar, and then Johor or the Kudai. Then you go up to Penang. Okay, you got the Kulim, you got the Serang Prai, you got the Bayang Lepas. All those are what we call the integrated circuit. Now you see here the export. Now a little bit of comparison. Our Malaysian reserve for 2020 is only 102 billion. Okay, 102 billion, which means 1 year we export out. We sell 270 billion. So you think of it. The COVID we stopped for 3 months or 4 months. So you do your maths. So almost 25% already gone already, correct? So 1 year we made 270. Let's say 2019 we made 275. Okay, 300 25%, which means we actually lost. There's an economic of calculating maybe about 25 to 30 billion dollars, and that's why the governments really need to move this back. And if you notice here, which sector do you like? Integrated circuit, which is all the chips making one, right? Because we ship out, right? And or refinery product, oil and gas, okay? Petroleum, all this, and crude oil is only 3% only, crude oil, like of the things that we export. And rubber will definitely increase because rubber now is only 1.66. That was in 2008, but this round because of the huge demand. What is this program to get this photo? Oh, okay. This one just use a snipping tool a lot. Just type snipping tool on Microsoft, you can find it. Okay, done. So you can see here, which one do you all like? Integrated circuit, oil and gas, palm oil, or rubber glove? Type it in there, will you? Okay, which one do you think? Yeah, that's right. The Chinaman in Yayong, that's right. Oil and gas in here. Okay, so what do you think? Which one? Which one is it? IC, palm oil, that's right. IC and oil and gas, that's right. So that's what every one of you would have a different inclination based on your jobs and based on this is what happened. Integrated circuit, palm oil, or rubber and oil and gas, because these are the fastest to really recover based on our Malaysian export. Okay, so you all understand right behind it. So you can see why these are the first who jalan first, because our country, like it or not, country only got reserve, which means your wallet only got 100 ringgit lah. Let's say 102 billion of our Malaysian bank negara lah, got 100 ringgit in his wallet. Every year he make 270 ringgit. Okay. Right, so 3 months didn't work already. So he has to cover back, because the no reserve finish, no. ICs for 5G and IoT. That's right, Julius. Okay, so let's move on. Okay, so there's a lot of technologies in here. Just want to share with you. Some has matured, some has not matured. But that tells you. Basically, want to tell you about this chart. Any technology, they will go up here like the smart robots. After a while, they'll come back down. Like just like NLP. Okay, smart Robie, all those technologies on chatbots, like what we've done, are sort of coming down. They hit a peak in here. All right. Now, because of the integrated circuit that we talk about, almost 21% or 20.6%, and some of you said, right, in I see in here, you can see the growth from 2011 has grown up almost power of 5 times. And that's why you cannot ignore it, especially the COVID-19 has speed up. Usually, the digitization of a business will take somewhere between 3 to 5 years. 3 to 5. Right now, if you don't digitize in 3 months, you go bankrupt. Correct? No. So they have to compress 3 to 5 years in 6 months. That's what you will see. Previously, I talked about PayPal, the e-commerce, the how much people have been making that need. Then the Food Panda, the Ubers, all this because of the COVID. What has happened is that COVID-19 changed the way we see the world. Like what Eric said, just now I like what he said, the new normal. That's right. So he has changed the new normal in here. So things that we used to think about, I never thought about our fixed deposit in Malaysia go so low. We're going to have another cut, to 1.25. At one point, so whether we go negative or not, that depends how bad it is going to go, where the market will slump. All right. So this is what we are seeing right now in here. Okay, let's move on quickly. So this is a very important one. You can take a picture of this one in here, because in terms of Malaysia, our Malaysia sector industry, the smartphones, yes, we have it. The tablet, we have it. The PC, we have it. The wireless infrastructure, yes, we have it, right? Those company, again, next week I will talk about it. The data servers, a little bit less, okay, because in somewhere near the PJ there, they have this place, they make storage one. Okay, so industrial product, all this, very important, take note. The growth, okay, the yearly growth from 20 to 25, you can see here, smartphones taper off already, 6%. Okay, very important, understand the growth. Just like why if you compare to rubber glove. Okay, now rubber glove, where to check which company? Not yet. I will check for you, don't worry. Now, if you notice, rubber glove used to be around less than 10% only now. But this round, because of the COVID, went up by 30%, the CAGR. What stands for CAGR? CAGR stands for Cumulative Average Growth Rate, which means every year you grow so much. Average 3%, 3% go. 6%, go up. Like that. So you notice, if anything below 10%, the CAGR most of the time is just organic growth. But once you hit across 15%, you'll take notice. Now, this one sort of, they taper out. So you can see automotive, because of what? EV, electric car. That's right. That's the one will grow. Industrial electronics, all the 5G phones and things like that, right? That one electronics will go up into all the devices, IoT. And the wireless one, which is your router, so not much. So take note, the 3 biggest growth area here will be data storage, 12% inside here, which is all the cloud services. The automotive, the EV, because a lot of our cars are still run on combustion. And industrial. So these are the area, industrial and automotive, like what Evelyn said. How do you find them? I'll give you an example. My son, it's really like Dyson a lot. Okay, and he's trying to say, Dad, I want to buy Dyson share. I said, Dyson not listed. Dyson has moved the operation to Singapore, which everybody know, right? They are also retrenching people there because they are doing more things with the Malaysian company. So that's a good clue, isn't it, right? The Dyson cut all the stuff in US because they cannot produce things as cheap as good as Malaysia, right? Like it or not, Malaysia is still considered a Swiss quality at cheaper than China price. Okay, that's what we are talking about here. So those are the three sectors. Okay, let's move on. Now, in any industry, we started, okay, we have the life cycle in here, the innovation in here. So right now we can see the growth of the semiconductors, the next going for 2020 is going to be around 9%, depending on how much of the pickup is going to be. All right. Of course, the rubber glove are super, they're like 30%, 20%, 25%, depending who you talk to. So those guys are like, but it is still a growth. So when it comes to, when you study this in economic industrial life cycle, you'll see we are actually more of consolidation to matured stage. You know, we haven't seen a decline yet because of the IoT. But what happened, the COVID-19 has sort of reboot a lot of the digitization. That's what I'm trying to say here, which means used to be is like decline here, then suddenly you have another S-curve going up. That's why it's super speed everything, and that's why it's important that you all know this information. So when you buy, you can sort of think, hey, when I buy Penta, look like Penta, okay, Penta Master, which I bought around $4, now already 6 something. I think I talked about that on Penta. Go over to YouTube, check it out. Revenue hasn't run yet. Who knows? 3 months down the road, will revenue go higher? I don't know, but I bought some for myself a day, okay? So this is the one. Okay, great. So here is that we talk about, so right now here is the post-COVID global economy. So this slide simply tells you, if the global economy recover, the semiconductors will recover too. You can see here, right? And as the market goes in here, that's going to be a recovery point. So, global economy recovery will recover, that's for sure. It's either going to be 3 or 4% or 2%. When they recover, semiconductor recover. Okay, so that's the trend in here. Now, if you look back at the last 10-year boom cycle, market go up and down, up and down. Before COVID, we have a 10-year expansion boom cycle. Then we have the COVID, we have crashed 40%. And right now, we're coming up from that, which I did talk a lot. So if you look from the chart here, you can see very nice chart here, right? You will see here we have way back Dow Jones on 1973. I can put up another one for KLSE. You can see market crash, market go higher. Now, especially those of you who have no linkage back to the past, okay, what has happened 10 years ago, this is what it looks like. Okay, market crash, market can go up. Just like COVID crash, that's what a lot of people came in. Now, this is like the 2008 market crash. Many of you like sort of buying here. And many of our retail investors, they are saying, look, the COVID-19 is like this. I buy around here. Eventually, it's going to come up like that. Is that for sure? We don't know. To be frank with you, we don't know. But we do hope so. And one of the things is that we always tell our investor, if you're going to look at the whole totality, just not restrict yourself to Malaysia. And that's why one of the things we do with our members is also teach them to focus on US markets. Make sense? Right? If our market collapse, if our stocks don't jalan, very few, what are we going to do about it? Right? I and you, we are going to be investor. We are still going to be, looking to the market. So the best I could do is to sort of rotate ourselves out from rubber to technology, but technology in Malaysia rotate out to US and some Malaysia. I think that's the message that I wanted to say in here. Okay, good. So economic sector recovery guide, okay? And now if we are right at the early bull, okay, early bull, and then that's why I said that, number 5, number 6. And you notice that healthcare usually at the top there, but because of the COVID-19, he has brought forward to here, much to this early stage. So 5 is technology, basic industry, in this case referred, in the Malaysian context again, consumer industrial products. All right? So even if you follow the economics guide and what I've just talked about, it makes a lot of sense. Tying back them together, okay? So you all know, in those of you who don't understand much one, very simple. Technology, only technology. That's why technology, okay? Then the question is, if you any stock that comes to you when I pick over in my shows or Zach pick them, is it technology? No, if it's technology, look at the chart, look at the FA ratings, okay? Look at the PE, look at the ROE, can buy or not? I can buy. And what is it? Is it part of 5G? Is it part of IoT? Is it part of electric vehicle? Those are the questions that you should ask yourself when someone pitch a stock trade idea to you. Is it part of what? Correct? Makes sense or not, right? So when you buy something, this is part of the emerging technology that Martin talked about. If it falls under there, I have a better understanding. There you go. Okay. How to invest in US? Thomas, we talk about that on another. I will give you an answer later. Okay. Do I say this makes sense or not? Okay. Okay. So let's move on. So now this is something I want to touch more and blow on for very specific strategy, what we call strategy analysis of the healthcare sector, right? But I did talk about it on the talk about a month ago or less than a month ago, Kosan, Hatta, and Supermax. What are the things? But if you look at it using the Portal 5 forces now, right now the biggest concern is the perception of the local retailer in Malaysia. To me, that is the biggest problem because they have pushed up, just now I was talking about it, the KLSE went up 160 points because of Hatta Lega and Kosan. And that's overblown. And also not helping are the analysts. Keep saying it's $30 and there's another analyst that say 110 ringgit. Right now, Top Glove, I think, dropped below $28. Am I correct? So that is, to me, is the biggest concern here. Do I say this makes sense? And they talk about, then they talk a lot about competitor, the China one. There's one called Blue Sail Medical. Then there's another one from Eastern Europe, right? But US, being US, they cannot buy from China. You still have to buy from Malaysia. So all these are dirty tactics which Trump used on the US Customs and Border, right? But the question is, the volatility is causing a lot of the retail investor to jump in and they get caught. Rubber glove has a stay, but you don't want to buy too expensive. So learn to read the chart. I know some of you are starting to look at the second tier liner like Comfort, Rubberex, or KLSE, or even Carex, which I picked. I don't know whether Carex used to make, condom, which is 1, and now got 5. Sorry, on the other day show, I got the other way around, okay? So Carex make 1, now they make 5. You know what I mean? I hope that's funny too, okay? Yeah, that's not Stanley Tai, but Stanley Tai will be out very soon, okay? That's the caretaker. On Supermax, I do believe Stanley Tai will be back by 2023. He's in prison for 5 years. Because of the insider trading, the sister-in-law, his wife and thing. I remember, if I think I'm correct, 2023, when he come back, he's the king again. All right, lucky for him for this rubber glove. I do believe that Tan Sri Lim and also Datuk Kwan of the Hatta and also Kosan one, all the Tan Sri, all are billionaire. I say, the money is nothing for them. Okay, only thing you observe is when their children get married. Okay, let's move on. Now, last one before I pass on, sorry, I think I was saying is the investment strategy. Okay, so the investment strategy, I will talk very quickly, but I will cover them again. Now, this is important. Get ready your camera. I'm going to go through very quickly, right? Because once you know those sectors, next week, I will come back and cover them more important. So get ready your camera. So there are 4 strategies, okay? The dividend paying share income, and this comes from the books, okay? So the strategy, collect dividend, partially ignore, stable yield, and avoid too high dividend payout, little no debts, and increasing dividends. So those are the sort of the stocks. That's a bottom-up approach, okay? Now, I have a book in there. I wrote it some time ago. I'm not promoting my book. I know some of you are going to ask me, Martin, where to buy your book. It's in the bookstore, but very hard to get. And a lot of these things I sort of teach you guys right now. So also pay notice to the picture, okay? The picture is 2 elderly couple who is looking for shares to buy, okay? So next strategy, which is the regular investor, and you only buy something that you know. All right, and I did talk about this strategy on my second book, which is a supercharge. Again, focus on mid-cap and large cap stock, which you all see regularly and you all buy. It's a blue chip and there's constant earning, but the thing is that the growth has slowed down. But they still got new product slowly lah. But to improve now, the thing is with this regular Joe investor strategy, which is number 2, you only buy things that you know. So in order to buy things that you also need to search out. All right. So these are more people who are first time coming in. Now, many of you who are coming in for the first time, you may say, I don't know much. I don't know, I only know what is popular. What is popular now is rubber glove, right? And that's why you buy rubber glove. Rubber glove because you're the average investor Joe. But the problem is it's not undervalued. Correct? It's not undervalued, right? It is grow. So again, get educated, get the right skill. And the third one, right, it's what we use in Pentagon Guider, okay, our Pentagon Guider. And what we try to do in here is more for the younger one. Now, early on, right, we talk about the growth strategy, okay. Number 1 and number 2, which I talk about now, those are not growth strategy. Number 3 is the growth strategy. Small to mid-cap, fast growth company where you filter out earnings are growing by 15 to 20%. Risky because they're not covered, right? Less coverage in there, and you're going to be wealthy once the revenue and cash flow appear. And that's why we are trying to understand the trend. 2021, when the GDP growth grow, the cash flow will come, this company will grow. Make sense or not? If it makes sense, give me a thumbs up, okay? So this is the part where we, myself and my coach, we try to, train you to use the screener because it will be least coverage, at least when the stock comes out. Remember, you asked the right question. Is this fall under EV? Does this have IoT? Does this do data storage? Does some of the product go into Dyson? All right? Then once you understand that, you buy, that's why you become wealthy, because the cash flow will come in. That's why the screener is important. All right. So that's now the fourth one. I'll bring my guy in, which is the CANSLIM, which is a new approach. Now I've talked about it in earlier on, but Arif on Thursday did a very good job in here. So Arif, you ready, Arif? So I'm going to bring Arif in here to talk about it. And then when you come back, I'm going to kind of sum up everything for you. So Arif is going to talk about CANSLIM, really touch on this. And then I'll bring Zach to talk about our screener, which is the fast moving sectors. Is it okay? All right. So I'm just going to rest back, but I'm not going to be away. And you'll be with me again shortly. All right, Arif, take it away.
All right. Thanks, Martin. Hi, everyone. This is Alif here, doing a sound check, testing 1, 2, 3, test whether my sound is coming in okay. All right, good. So I'll do a screen sharing. Martin, do you need to end your screen sharing? All right, thanks. All right. Okay, good. Okay, right. So today I'll be doing a talk of, this is actually an extended part of the CANSLIM method, which I talked about last Thursday night, okay? And if you're just listening today for the first time and want to know more about CANSLIM, you can go on to the Google what you call this, scan the QR code here, all right? Or you can just take a picture of this link here, all right? It will direct you to the YouTube channel where we have the video recorded last Thursday being put inside in YouTube. If not, you can just go to our FB page there at Martin TF Wong, and also you'll be there as well, okay? So I'm just going to take out my laser pointer here. Right. So for the benefit of the audience here who are first time listening about CANSLIM, I'll just go through briefly about what is CANSLIM all about, right? So as I explained last Thursday night about CANSLIM, okay, what we can see here is that CANSLIM is actually an acronym of 7 criteria, and this CANSLIM is created by this guy here called William O'Neill, right? And William O'Neill, he is the student of Wyckoff method and one of the first generation along together with David Weiss and Tom Williams, who created his own trading system. Now, you know, like David Weiss, he created the system what they call the Weiss wave volume, and then for Tom Williams, he is of course the father of a volume spread analysis, who happens to be Martin Sifu. Okay, now the purpose for the CANSLIM is to select the best potential stock candidate that can generate good returns, all right, in the long run with a holding period of usually between 15 months to 3 years, okay? And the CANSLIM method usually encourages users to observe the stock by doing a study about the company and looking at the fundamental as well as the technical aspects as well. So the 7 criteria for the CANSLIM is as follows, okay, which is C for current quarterly earnings, A is the annual earnings growth, N is for the new product, service or management, S is the supply and demand, which is referring to the stock, the price and volume, L is leader versus laggard, which is obviously looking at within the sector whether the stock price is the leading or the one is laggard. I is institutional sponsorship, which refers to the participation of these institutional funds, and M is for the market direction, which whether is it on an uptrend or a downtrend. Okay, and out of these 7 criterias, 2 covers the fundamental analysis, which is CA, 1 on looking at about the company itself, which is the N, and the SLIM there, SLIM, are the 4 criteria that look into the technical analysis. Okay, and just now Martin did share about the CANSLIM parameter. Now, this CANSLIM parameter is it was set by William O'Neill himself, and it is based on research done on the US historical data. But bear in mind that because this research is very much US centric, so we are not sure if it is applicable on Malaysian context. And one thing that CANSLIM is also workable in the US market is because that William O'Neill, apart from having his own trading firm, he also owns a newspaper which publishes this paper called Investors Business Daily, or IBD. And this paper is where all the research done by William O'Neill and company is being put inside the paper and being published out, and the users or practitioners of CANSLIM, they can just refer to this paper on some information like the, what you call this, the EPS stability, the annual cash flow per share, ROE, and so on, and also the institutional as well as the management involvement in this, in that particular companies. Okay, so very much work is half done by William O'Neill himself, the founder. So the others who follow the CANSLIM can just follow accordingly. There's no issue. Okay, but problem is that okay, in Malaysian context, you may find some companies that can meet the CANSLIM criteria. But the main question is that how many of the stocks that do you think will go? Because he talks about like the stocks, if you buy and hold, it will go up like around 1,000%. Or maybe 2,000%, you know, we buy and hold for like between a 15 months or 3-year period. But if you look at the criteria, right, how many companies do you think that will fulfill or follow according to the criteria? I think it's quite less also. And even in Malaysian, if you see some of the stocks also, right, stocks with not so good EPS or even a negative ROE, but the fella can still jalan, you know. If you look at, if you refer back to the CANSLIM talk that I did on last Thursday, we talk about how the criteria is, especially they look into fundamental. Fundamental doesn't pass, then it will just not filtered or shortlisted as a candidate for the stock to be bought on. But for Malaysia's side, in my observation, what I noticed is that if you use technical analysis to trade, and by trading according to sector, as what Martin has mentioned, right, it works well. It really works well. Okay, and of course, another method if you want to explore is by trading on stocks with good fundamentals lah. Like for the next slide, I can show you here, which are the 3 stocks that we talked about the last Thursday, which is about SciComm, GCB, and Cyberdynamic. This information you can get from the smart Robie here. Just maybe you have like some of the shares you feel that is good fundamental, but you want to know whether it's confirmed or not, then you can check this under smart Robie, and it will come out these ratings here. So this is quite a good rating of F. Fundamental of like 5/8 or 7/8. All right, maximum is 8, and you can, you know, if once you have these good fundamentals, maybe you can look at the technical aspects just to trade in and out. Okay, and if you follow CANSLIM, ROE, yes, is above the 70% points here. Okay, almost there. And in terms of the intrinsic value, above the price of the stock is below the EPS or the intrinsic valuation here. Okay, so it's kind of like a good, I wouldn't say bargain, but it's a good opportunity for you to make the trade, to trade on according to a strong fundamental company stocks. Okay, right now, coming back to what I've said earlier, trading using technical analysis and from sector to sector will do you well in Malaysian context. So we will look into 3 sectors. I will just briefly bring you through the 3 sectors here, okay? Because later on my colleague Zach, he will show on the usage of the screeners, all right? And we will look into the sectors for Plantation, for Rubber Glove, and also for the technology stocks, okay? So the first one we are looking at the plantation sectors. Now, plantation sectors, we can see that in terms of the demand for the palm oil is there. You can see in the global consumption of palm oil in million metric tons, it has increased from 35 to 72 million metric tons in 2019 as compared to 2007. And majority of it comes from the use in the food, in F&B, in the manufacturing for the food, you know, and so on, and then some of it under the industrial use, and the others are, although there but quite small, but contribute to the consumption for palm oil. And it's quite good, especially for Malaysia and for Indonesia, because these two countries are the major exporter for crude palm oil products. Okay, but if you look in terms of the if you apply like CANSLIM, you look into the financials of these four big companies, right? FGV, Arsawit, Taan, and TSH, you can see that although the revenue is quite increasing, or it somewhat fluctuates, but their bottom line is quite on, sometimes, it's like sliding and negative, and it doesn't really correlate with each other, because you have the demand coming in, but why did they have negative profits there? Okay, and some of them, like Taan, they do well in 2015, but in 2015, the same time for Arsawit and for TSH, they are in the negative. So it could be like some sort of some issues or internal financial issues they are facing. But if you use the CANSLIM, definitely this one already out already, because CANSLIM, what they ask is that on annual basis, at least 25%, on annual earnings, of increase in annual earnings. And I think maybe Arsawit can for another category, but you look also is like still doesn't really give you a good it doesn't go jive or go well in harmony together with the CANSLIM method. All right, but if you look at the shares also, some of them, even though the price come down, the net profit of the company come down, but the share price fly up. You see, like here in the negative for Rimbunan side, but I believe if you look at the chart there, it's already like moving up or just like going up and down, although a sideways range, but there is a good chance for you to make a trade there. Okay, so this is one of the examples for Plantation. And if you look at the fundamental side here as well, we can see that definitely doesn't fulfill the the CANSLIM methods, yes, under the if not mistaken, under current current quarterly earnings, okay, because the ROE also now, if you see at FGV, is negative. This one also is negative. And even if Taan and TSH as well, if you see ROE is still not at 17% or above. The criteria for ROE has to be 17% and above, but this one is on the negative, is below the 17% here, and ROE here as well. Okay, and for those under negative, definitely, because EPS is also in the negative, so therefore already thrown out from the books. Okay, so if follow for CANSLIM for this Plantation, you kind of like miss out the good trade, if you use CANSLIM. But if you use based on the sector analysis and using technical analysis, then you'll be able to get a good return from here. All right, next will be on the rubber glove. Everybody knows rubber glove is on the rise now, and we can see these are the chart for in terms of the revenue has been on the increasing. Okay, for top glove is on the rise here. This up to 2019, but 2020 I think it will be probably a parabolic move because of the demand, surge in demand. Okay, and then we see here Kosan rubber, the orange color here, and we have the Hatta Lega here as well. Missing here is Supermax, but I believe it's somewhere in between the top glove and also the Hatta Lega side here. Okay, so probably it's around here. So also it would experience an increase in terms of revenue as well. But if you look at the fundamental side, the financial reports, in terms of the profitability, is still quite okay. All right, still quite okay there, but of course like Hatta is like quite dwindling, going down further, but top glove is like going up again. All right, but if you look in terms of percentage wise, you follow for CANSLIM, definitely I think most of these big four, so you can't really doesn't fit in the first category itself, in the second category itself, which is the annual growth of EPS more than 25%. Okay, but yet what do we see now in terms of the chart wise? The price already just fly up already. Okay, it's just fly off already because of the external demand that is required for the rubber gloves, and the vaccine until now still on R&D basis. So I think a glove is still going to have one more leg up to go before the news comes in. Okay, and in terms of the fundamental wise also, if you look on using the CANSLIM, ROE, yes, is quite positive here, above 17%, but the rest I believe is less than 17% for ROE. But in terms of fundamental, is quite overly expensive here, most of it, because we see that the price valuation fundamentally is around 4.57 ringgit for top glove, but closing price as of yesterday is around 26 ringgit 12 cents. So these are the ones where, you know, if you use fundamental basis, but to strong fundamental, but to trade, maybe you have some 50-50 whether should I or should I not trade. Okay, but if you look in terms of sector wise, you look into the chart wise, then you see that there's a good opportunity here. I think that time most of the glove, I did do a write-up about the rubber gloves sectors. I think majority is between, at that time, I think it was around 2 months ago if not mistaken, and it just the rise of the price is between 20 to 800% at that time. But now I think it will be more lah, because most of it already jalan already. Okay, I thought it price may go down, but eventually it's just like doing a pullback, and now it's like going up again. So probably now it may do another pullback again, and before it starts to do the one leg up. But the last final leg up usually is quite risky because the tendency for it to fall is quite high. Okay, then we look next will be the technology sector. Now, technology sector, Martin did cover about the semiconductors, the Internet of Things, and so on, right? So we see that in terms of the revenue by region, okay, we see the Asia Pacific, we can see in the total revenue is on the increase here, okay? Previously it was just above the 200 billion US dollars, but estimated by 2022 will be above the 350 billion US dollars, all right? And we have also that recently Dyson, I think it came out in the news today that Dyson is laying off a number of people in UK, and probably as what Martin mentioned, they have like R&D available in Singapore and also in the UK side there. So we may see them relocating a factory to manufacture the Dyson products either in Malaysia or Indonesia or probably in Thailand. But again, I would say Malaysia will be a good candidate for them because we have the facilities available, we have the experience to handle this foreign direct investment coming in. Okay, and in terms of the semiconductors export, Malaysia stands at number 5 here. Okay, although small share, but we still, you know, around 9.7% of the global export or the resource comes from Malaysia side here. Okay, but if you look at the charts, we have like JF Tech, Globetronics, Inari, and Pentamasters. We can see that, you know, again, the movement of the net profits here, we see it doesn't really jive with CANSLIM method. Of course, here maybe G-Tronics will be a nice one here, okay, for the 1 year. This is the past 3 years. If you look somewhere here, the past 3 years, but again, here tak boleh. I think somewhere around here. Okay, and here also we see like Pentamaster. Okay, but the rest here probably will not fulfill the CANSLIM method inside there. So the next one you would see in terms of the fundamental side, only two that is above the 17%, which is the Pentamaster and Globetronics, and the others is just almost there, but not there yet. Okay, it's still in the positive, but it's not be above the 17% there. Okay, so in terms of the intrinsic value as well, most of it is being labeled as overpriced. Okay, but if you look into the chart, you can still see that some of the stocks already jalan already. Okay, I mean, if you target just around 10 or 20%, depending on your trading strategy, you will be able to get a good trade from there. Okay, and you know, by following the sectors, I think you can even get even more than 20%. All right, so yeah, that's okay. That's about the presentation about the application for CANSLIM methodology. My opinion is still that you are able to make a good trade, okay, by just using chart-wise, just looking at the chart-wise, using technical analysis, and you go based on sector to sector, okay? Because I think that will be a suitable environment for Malaysia side here, all right? CANSLIM, you can try and see on back testing basis, but knowing our Malaysian side here is going to be a bit tough lah, I would say, okay? So, yeah, that's all for my presentation, and yeah. Okay, all right. Let's see on Facebook. Okay, Right, so there's nothing much. So thank you. I will pass now the floor to Zach, who will now take over and show you on the screener side there. Okay, so Zach, is there any, sorry, Zach, I'll pass to you. Okay, right, most welcome, like here, right, Timothy and Richard, thank you so much. Most welcome. Okay, so I'll pass to Zach. Zach, are you ready?
Yes. So thank you, Alif.
Okay. Also, that recently, Dyson.
Right. Okay, hello everyone. Just want to do a sound check, please. Okay, is my sounds okay before I start? Okay, sounds good now. So okay, today I think just a quick one. Okay, just want to go through some of the sectors as like Martin mentioned, so the next trend sector to watch for. Okay, so for me, I always like to look into the team. Okay, before I want to look for my trades. Okay, so today probably going to show you what's the things that technically we look for when we want to look into specific sectors. Okay, that we can trade. For myself, I like to trade something is probably short to mid-term. Okay, of course, if you ask me, I still kind of prefer tech sectors, okay, compared to the others. Okay, so let's take a look into our screener first. Okay, so most of the time, I just wanted to use the dashboard here to look into the top 3 main sectors that I want to focus. Okay, of course, from time to time, this sector will change. Okay, so depending on are you trading on short terms or long term. Okay, now do let me know if you got any questions. Okay, I tried my best to help you out. Right. So okay, get your access and then should be under here. Okay, sector analysis. Okay, so on this sector analysis, technically, I always focus the top 3. Of course, finance I think is like coming back, especially like public bank, but due to the price, right? So I don't really focus that a lot. Okay, unless you want to go for the warrants, I think yes, it's possible. But for me, I always like to, especially I still think that currently still a bit like kangaroo markets a little bit, right? So sometimes it goes up and then it washes you upshot and it goes back up again. So I still prefer to trade something is like between 1 ringgit 50 cents or maybe 1 ringgit 50 cents kind of areas. Okay, just to be safe. Okay, so I think healthcare are having some sort of momentum, especially on Thursday. Okay, so again, this is how sector analysis. Okay, I look into the top 3 sectors, and that's where I start to look into my potential trade. Okay, so that's how I do it most of the time. So top 3, we got healthcare. It's coming back. Okay, things like healthcare has been quite quiet for almost a month or 1.5 months, and finally mostly turns to green penguins back. Okay, if you realize that, okay, members. So technology, of course, mostly still in a very good one, like Jofu, Penta, Jeff Tech, Grab Tech. Okay, revenue is coming. Okay, so we want to take a look. Okay, Corona a bit disappointing, but let's see how it goes. And then, of course, Plantation just started to move. Okay, so some already actually successfully break. Okay, some is still in accumulation. So make sure you buy something is kind of lowest for yourself. Okay, don't try to chase the price. Okay, so probably today, due to the time here, I was just going to go through one of the sectors. Again, members, you can always use the sector screeners that we have here. Okay, if not, you can always go to check out the list. Okay, I think Malaysia Stock Top is to provide it. Okay, where can you get the track? Actually, this is for the premium dashboard under TradeVSA. Okay, so you can get that. Okay, so okay, maybe we focus. Seems like sometimes I like to trade something is coming, just go showing some momentum because that's where they show you got momentums to go, right? So okay, maybe we try to focus Plantation. To be frank with you, I still got some expectations towards Plantation next week. All right, now tech a bit slow now slightly these few days. Okay, I think it's good for those that want to buy on pullback. Plantation showing some strength, sign of strength. Okay, especially towards the closing of last Friday there. So well, let's see whether got any continuations or not. All right. So okay, I like to sort out according to long-term trend, which is the 200 moving average. Okay, and if you want to, you can also sort out according to 3 months, 6 months. Okay. So what I want to do is that I want to trade something is coming up. I've got some sort of momentum because I don't want to buy something is like still in like downtrend, like all this kind of stocks. Okay, like I said, I'm focusing pretty much on like a short-term one, so I just want a quick one go in 10 to 15%, then we just take profit and go, right? So okay, I think this is a list that I think kind of like fit our criteria, okay, pretty much. Okay, RSI is always my favorites among all. Okay, again, this is for trading, it's not for FA, and definitely this is not a buy call. Okay, this is not a buy call for you all. Just education, like Martin says, education sharing, how we use Bollinger Spread analysis to help me further, okay, in my decisions. Okay, so looking back into RSI, I think for those that who follow us in the live Facebook, Martin do talk about it. I think I do talk about it too in 9:30 sessions, right? Green Pentagon just turned, okay? I think Jatiasa, TDM, Blue Band just turned recently. Okay, I think the rest also turning to Green Pentagon since 2 weeks ago. Okay, and finally, volume. Like I said, volume is very important when we want to read based on one spread analysis methods. Okay, so good volume towards the closing. If you look into this hourly chart, okay, against volume, Green Pentagon earlier morning, okay, to show you that, okay, somehow they are kind of ready. Okay, wanted to trade again. So they are kind of ready to come again. Oh, my chart block, is it? All right, so probably I hide this first. Okay, how can I hide this? Maybe let me try. Oh, I don't think I can hide. Okay, never mind, it's okay. So I just want to move slightly a bit of my charts. Okay, all right. So sorry about that. Okay, because I was looking at get response. Get response how the layouts kind of different. All right. So looking back to this RSI, okay, I apologize about that. Okay, Green Pentagon turned good closing. Okay, so like I said on yesterday live Facebook, right? For those that who miss it, okay, well, let's see whether Monday got opportunity or not. Okay, if let's say volumes low pullbacks, then you can maybe want to grab something. Let's say it breaks up. Usually I don't encourage you to chase. Okay, because why? There's still got other sectors for you to study, right? Sorry, where's my sectors? Okay, yeah, over here. Okay, I still got tech sectors. I still have healthcare sectors, right? So make sure you get yourself a good price. Okay, so I will never know what my profit is. Okay, but one thing for sure is that before I enter my trade, I will know where is my risk is. So measure risk. All right, Matang. I think Matang's suddenly got some sort of momentums the other day. Right, so well, started to break out. I think this is the one that highlighted by Mr. Fu, so together with Zealand. Okay, so started to break up. Okay, so let's see whether got pullbacks or not. Okay, so make sure I pop my alerts. And let's say there's another pullback, slow volume, which we share in the masterclass there. I'm going to make the trades again. All right, TDM also the other one that I kind of like it. Okay, if based on these plantation sectors, the closing is even stronger than our sound. Okay, because this actually closed above the UT. Okay, actually closed above the UT bar. Okay, again we study the hourly chart. Okay, for short-term traders, you focus the hourly chart. Okay, because sometimes member ask me, hey, should I use hourly? Should I use daily? Again, it depends on which one fits you. Okay, I cannot make decision for you, right? Because some members like they are working 9 to 5. They don't have time to monitor the screen. Okay, they only got like 30 minutes a day to monitor the screen. So impossible. I ask you to go for the hourly chart things, right? So if you are those busy ones, okay, look into daily. Okay, if you are those that got lots of free time, can do some tradings. Okay, so yeah, look into hourly charts. Okay, for you to make a decision better. Okay, like for example here morning, and then followed by a pullback over here before it goes up. Okay, towards the last minute closings there. Okay, so TDM, okay, should be quite good. Again, try to get a good price for yourself. Okay, I'm not so sure whether it breaks up. I'll not follow through. I'm not so sure. Okay, so TSH, I think Martin do cover that. Okay, successfully break up. And for those that who like these patterns, okay, members that have highlighted this group still take a look into DH plan. Okay, DH plan actually very resistance. It kind of follow a similar style of DSH. Okay, so based on these few charts over here, if I look into this overall sectors of plantation, I think definitely still got room to go. Okay, definitely still got room to go. Better than I focus on this, property construction still not that ready yet, unfortunately. Okay, it's similar like energy, the oil and gas sectors. Okay, it do show strength, but it's not ready yet. So when you buy, you need to hold maybe like another weeks or months. So the one that really moved is plantation. I think it's calm. Okay. So let's try a few more. Okay, if you want to, how about a issue here? Strong closing. Okay, so good one. Very similar TDM. Okay, but don't buy everything under all Plantation. Okay, like if you are managing your portfolios, like maybe 6 to 7 counters in your portfolios, try don't buy everything under Plantation. Okay, I always like to buy more on tech, but it's limited to 3 to 4 only. The rest maybe I'll buy 1 or 2 Plantation, maybe a few on healthcare. All right, so well, we got few already, okay, by looking into the sector itself. So just focus on sectors first, okay. Let's try healthcare. Okay, I think healthcare Friday doing a kind of good pullbacks. Okay, so let's see healthcare. Okay, just gonna get this list over here. So let's see, whether let's say in case, okay, our Plantation break up next Monday. Okay, breaks up and you can get yourself a good price. Okay, so we switch to healthcare. Okay, to look for a low risk trade for ourselves too. Okay, so again, I like to sort according to the highest trend. So of course, all this Supermax K plus 2 climatic. Okay, which is I don't really like that. Okay, I like to buy something that's very kind of near with my support. Okay, at least I know my risk is low. Okay, so I think Aventa is okay, 100%. Let's try. Okay, well, pullbacks with a narrow spread. Okay, volume is kind of average, so I think that Monday prefer to have lower volumes. Okay, for this. Okay, so well, next week we might have some sort of potential, right, for this. Okay, TCM Live. Okay, let's try TCM Live, or maybe my favorite BC more. All right. Okay, 2 bars, volume is getting lower. Okay, which is good. So let's try in hourly. Now, for those who trade short terms, okay, make sure you got green Pentagon in hourly chart, okay, and your volume must be high in the hourly charts. Okay, so that's the things that you want to look for, right? So let's wait for reversal for TCM. Okay, now Dr. Derek give me a list to look at. Okay, so just study the list with you. Okay, volume is still average. Okay, like I said, kind of like TCM, all right, 2 bars, the second bars, the volume is like, dries up. Okay, so which means that the sellers somehow is like, getting lower. Okay, getting lower. So okay, I was waiting for that. So, okay, hopefully Monday we'll see that. Okay, BC more. Okay, volume can't average again. All right, so let's see. Okay, but anyway, it's a good sign. Okay, it's a good sign because in a way, if you look into our chart itself, right, our chart doesn't show any major weakness. Okay, and in fact, it got several test bar. Okay, which is I kind of like that. Okay, 2 test bar, low volume, 3 test bar, low volume. Okay, which means that potentially support is there already. All right, last one for healthcare before we move on. LKL, let's try. Okay, LKL2, green pentagons, and we got 1 down bar. The volume is low. Okay, so look into the hourly chart. Make sure you get yourself a good price again. So what usually I do is that if in this kind of case, right, I try to buy pretty close with my support and strength signals. Okay, like example here, test, and test. Okay, so 3 test bar, good support, low volume. So that's the area that I want to look for. Okay, let's say break lower, that's where I want to cut. Okay, so make sure you don't risk yourself more than 8%. Okay, so good price 585. Okay, so break lower 575. Probably I'll consider to maybe exit for short-term trading. Okay, volume is good. Okay, in hourly chart. So let's see whether healthcare got any potential going forwards. Okay, so okay, last one before we go. Okay, maybe I'll look into some tech stock. Okay, like I said, tech stocks has been quite also for a few days. Okay, so it's good to look into some of these uptrend pullback counters. Okay, uptrend pullback counters. Okay, for all this healthcare, like for example, BCMO, LKL, they're actually now doing a big reaccumulation. Okay, so once the volume turns, you're going to follow through. Okay, and you have a second round. Okay, so make sure you take note of that. The big volume haven't turned yet, haven't come yet. Okay, in my opinions. But at least the up bars high volume is there, so at least that it actually tells us that you have to be ready. I think the one that we can take note also, this is the one Kelly. Okay, because Kelly, this is the big volume, high volumes, okay, and then this is the somewhat increasing volume, okay, so you can think on that still. But that's one big uptrust. Okay, so make sure on this kind of counters you use your hourly chart to trade. Okay, if let's say hourly turns red pentagon, then you exit. Okay, technology, let's see. Okay, all these I'm not really interested. Okay, I think you all know the stories, right, of this kind of stocks. So I just want to look for something that's still in accumulation, at least that when we buy, it can be low risk. Okay, how about we buy home? Okay, let's try. Weakness. Okay, weakness, not interested. Okay, I want to look for something with green pentagons, pretty close to support. I think Pestaram, we did talk about it yesterday. Okay, I kind of like Pestaram, to be frank. At least this is the one that when I look for entry, I don't feel really chasing the price. Okay, they're doing a big shake-up at the bottoms. Okay, around these areas. So green pentagon turns again, and this green pentagon actually turned with with high volume. Okay, so I know that somehow smart money is ready. Okay, smart money is ready. Okay, the trend is good. Here. Okay, we got a top 3 sectors. Okay, at least I know that the sector is moving, and this counters under technology is actually doing a shake-up. So my chances is pretty good. Okay, so Prestarium, well, maybe on the take notes. Omesti, okay, I think breakable resistant. GHL, CapNet, okay, let's try. GHL, I think they're doing a very re-accumulation for a few months. Okay, so if you like that, you can look into that too. Okay, GHL. Okay, actually break above already. I don't really follow GHL because I focus a lot in revenue. Okay, so well, next one. I have to admit that. Okay, GHL. Okay, they are doing re-accumulation. Okay, so this is the wash. Okay, again, wash with low volume, which is nice and healthy. Re-accumulation. Now finally it breaks. Okay, so what I expecting next is that I want to have a pullback. Okay, over here. So again, the sector is good. And the tech sectors because it's moving, and this stock's background is showing some strength. Reaccumulation. Okay, usually when you have months of reaccumulation, for this case is from June. Sorry, it's end of May. Okay, until end of July. So it took around like 2 months. Okay, so again, showing that somehow smart money are absorbing the supply of the market, and they are ready to push up even higher. Okay, so let's look into weekly. Okay, weekly is good because weekly just turns to green penguins too. Okay, so again, not so sure, but get yourself a good price. Okay, before you want to enter. JHM also doing a pullback now. Okay, let's try. MQ Tech. Okay, tell you into MQ Tech. Okay, now red pentagons. Okay, red pentagons, but red pentagons low volume. Okay, red pentagons low volume. So you know that they are doing shakeout or pullbacks right now. Okay, so wait for the next green pentagon high volume for entry. Okay, so I don't think hourly check got much of this info. Okay, so here wait for the next green pentagons to turn. D-Sonic doing a pullbacks too. Okay, green pentagon just turned 23rd July. Okay, and then we got a nail spread here, but volume still high. Okay, I mean it's increasing. So low volume will be next. Okay, for next Monday. Okay, probably I'll answer some questions you have for me. Let's try MQ Tech. Okay, if not, I will pass back to Martin. Nice uptrend. Okay, doing pullbacks. So if you want to, maybe you wait for the confirmation on SP. Okay, and then high volumes. Okay, volume is lower. Okay, which is nice. I think this is more like EMAS type. Okay, EMAS type of counters. Okay, which is nice. Oh, SOS, if I'm not mistaken. All right. Okay. So, okay, any other questions before I pass back to Martin?
Where to check the green pentagon? We have a tutorial for that, Zach, or you'll want to. All right, Zach, you can pass back to me, Zach. All right, can you all see me? All right. Okay, want to do a sound check, please? Is my sound coming in okay? Can you, sounds coming in okay? My sound's coming in okay, okay? Just want to do a sound check. Is the audio okay? Is the audio okay? Okay, good. That's good. Okay, you can see from my side, just now we had Zach and also Coach things. Like it or not, all of us have to start somewhere. Zach started with me a couple of years ago. Arif started with me. So as we train the people, they are out there to service you and to help you, all right? So if you are not trained properly, and most of the time, life is not easy for the average investor. I think some of you did ask very good question. You know, can I get more information of this? But I know I would like to know more, and that's what I'm trying to tell you in there. Now, most important, when you first started off, there'll be a lot of mistakes to learn. Okay, learn from your own mistake, but don't give up. Continue to follow us. And some of you, Zach was talking about one of the person he met up yesterday. Zach didn't talk about it, and actually he lost a lot of money. He cried in front of Zach, and he lost a lot of money. He was very emotional. He said he attended such and such thing, and all that. So things happen. Most important is that losing money is not the end of it. I mean, I think that's the message we have. That's why it's important. We always try to emphasize, you need to skill up. You need to spend a bit of money, a bit of time to understand it. And we have tons of material in our Facebook, and those of you who continue to follow us, I think you'll understand. If you're not ready yet, continue to watch all the free stuff. Right, we have a lot of free stuff, and we try to make it as simple as possible. When you are ready, like something that we talk about, but but very important. Let me just finish with this slide first. So, the challenge of being an average investor, and I will assume if you haven't been going through the channel in there, there's a lot of information out there, and there's a lot of information that are expired. If you don't understand what that means, it's fake news. Okay, like on the better word, we use Donald Trump words. We call it fake news. And there is also, if you have limited time, you need at least 1 or 2 hours a day, because especially if you doing it yourself, DIY, investor, everything also doing yourself. But at least now you have Smart Robie. Smart Robie sort of help out everything, and you become more resourceful. That's good. Smart Robie is a good way to start off it, but that's going on. So there's a lot of website in here. We definitely recommend Bursa Marketplace. Again, there's a lot of MLT. They have the Mirror, Learn, and Trade, and also a lot of broker website. If you are with CIMB or with UOB, they have those websites. They have a lot of those talks. Start with them. But always when you go for those talks, always ask the right question. Okay, ask the right question. What is the basis for this? Because we also have a lot of people that come in through our program. They hear this endless. They buy, for example, they buy a certain stock, a certain price, and then the market fell down, and then they ask us, okay, should we exit this or not? I asked Smart Robie. I say at the end of it, you must understand the reason why you buy this stock, and you always try to refer back to them when do you want to exit. Okay, so right now we have a lot of this support, our WhatsApp, our Telegram. Some of you did ask about our Telegram. Later on, I'll just flash out a URL code. And there's a lot of seafood out there with Telegram chat group. Go and join them, okay? But more importantly, look for education. I think that's very important. We want someone to not to just show you, I made 500% return, and I'm not knowing eventually, that they do a lot of this so-called leverage product in there. To me, very important. I felt many of you who are coming through education, getting the content is important. When you first start off, you don't want to fall on the wrong feet, and then else you're going to be, learning up from your own mistakes. And then there's a lot of indicators out there. Economic news, learn to follow it. If you cannot follow those economic news or read the newspaper, watch my breakfast show, Money Talk with Smart Robie, every Monday, Wednesday, and Friday. At least we have there. There are some other seafoods out there. I claim they are much better than me. But I also learn from them too, and we do a lot of Facebook Live to connect with you, just like you connect with the other seafood too. And also starting today, okay, please, can you do the last one? Create a watch list. What are the things that Zach talked about? What are the things that I talk about? Because next week, I'm going to come back. Now, take note, some of you may have taken the pictures of all those sectors. Go back and do a bit of research, okay? And then next week, we'll talk about those stocks. Today, Zach is just looking at it from a technical standpoint. Next week, we're going to be looking at, okay, this sector, EV. Okay, this sector is industrial. What do they do? What do they do? And then we're going to build that thing. Is it okay so far? If it's okay so far, just type on with the watch list. Can you type on the watch list? Okay, thank you, Mizu. Okay, the team, good job. Yeah, we couldn't do it if I don't go out and train you guys. Go out and train my coaches and my thing. Okay, just do your watch list for your strategy going forward in there. If you can, just do that. I think that's very easy, because when I first started, Zach started, our coaches started, all of us, just like you and me, we all have the same problem. No one stuck in and suddenly becomes super investor. Not like Warren Buffett. You know about Warren Buffett, right? The photo that you see on the right-hand side. He also worked for free for Benjamin Graham, but that's another day, another time I'll tell you about his story. Okay, so do that. Now, for our last closing in here, we're going to get down to last closing, which I want your feedback, please. Okay, which strategy do you like? Okay, which strategy do you like? Do you like the number one? Okay, if you like number one, type number one, okay, which is a dividend. Again, those probably fit people in the more senior one. Number two, the average investor. Okay, the average investor strategy. Number three, the small, mid, fast cap growth. All right, more for the younger one. So if you are in the senior a bit more, do take note. Now, if you switch from number one, okay, let me just bring this in. If you have been trading from number one all this while, you want to switch to number three, then you need to upgrade a certain skills. Do I say this makes sense? I know you all like number three, but number three go up and down, or number four, which is a CANSLIM. Now the CANSLIM is more for people who is like Elon Musk in there. They are more like combo formula recipe. Okay, there is actually a recipe to do that. Some engineers, I know they love CANSLIM because they can understand CANSLIM, all right, in there. So some like 3 and 4, wonderful, right? Some like 1 and 3. That's why at the end, what we're trying to say, look, at the end, all these sectors that I talk about, it has to come into reality. What does it mean for me? All right. What strategy you want to use? Number one, number two, number three, number four. Now, I will always give you an answer. As Martin Wong from the founder of her, right? You want to know the answer? You want to know the answer or not? Okay. Now, if you want to know the answer, okay, just type A and S. Okay. I'll tell you the answer. Les Bullock go for number three. Okay. Les Bullock go. Yes, that's right. I think it's also true. Okay. Want to know the answer? The answer is all three except number two. Two half only. Why? Because if you are a regular investor, very hard to make money. Because if you're a regular investor, all right, you will chase after rubber glove. Am I correct? No. You won't be looking at Plantation because you don't have the information, you don't have the skill, right, to do that, right? So 1, 3, 4 is correct. 2 is half correct. If you are starting from an average investor, the regular average investor, you only buy things that you understand. There's nothing wrong with it. Having said that, but a lot of things are overpriced, right? So get the skill, get the tools, 10 out of top, whatever the case is. And if you are number one, especially if you are in the senior side, like this old lovely couple inside there, right? This is where you may want to scale up a bit, okay? Right, to move to number 3 or number 4. Now the regular, most of you will come in as using number 2. Your strategy will be number 2, okay? Which means you're a regular average investor, you have not attended any course, happen to pass by life and be, I find this thing interesting and maybe I want to explore a bit further, okay? Now if you want to, so summary sectors, let me just sum up in here, okay? So which sector do you like? Tech, consumer, industrial, CPO, rubber. From a Malaysian context, that's all we have, all right? Tech, consumer, industrial, CPO, or rubber. Which one do you all like? Type it in there, okay? So type it in there and let me know. You can have a thing, okay? Now, if you have tech, CPO, and then rubber, right? Zach talk about, I've talked about rubber. Rubber can go higher. There's a lot of tech. How much of the rubber do you want to allocate? right? Is it a fast-moving tech? Is it a dividend-paying, or is it the average investor? Average investor, we might go for rubber and things like that. Okay, tech sector. Some of you may just pick everything. That's fine. There's no right or wrong answer in here. So I just want to clarify with you. By the time you finish this talk, you are prepared for the CV2, which I will do next Saturday. Okay, please also tell your friends, share all your things inside there and things like that. Okay. So very important. Also, do consider your financial goals and your time frame, your skill, and how much time that you have. Most people coming in as an average investor, Joe, they don't have a lot of time. They just like to, hey, I want to listen, like this guy inside here. You know, they hear rumor, they talk to the advisors, they talk to their analysts. Any nice one inside here? No, all right. So if you don't have time, a lot of time you just do the simple things. If you got time, you can follow the right Sifu or follow many Sifu. I know some of you are listening, like they go to 5 Sifu. As long as they are free, we go to it. All right. So saying I'm also a Sifu free, you also come to me. So you got Sifu 1, Sifu 2, Sifu 3, Sifu 4, Sifu 5. Right? And when 5 Sifu say the same thing, only you buy. To me, that's a recipe for disaster. Okay, you must try to understand. Not all Sifu is in your best interest. We try to be as honest as possible with you, so you can tell. All right. So this is I always believe in this business. The people who is the most honest, I've been doing this for the last coming to 20 years already. Okay, and then right now we just that we are bringing up the next generation of Wyckoff trader, the next generation of VSA trader, and that's why we do all this activities, courses, masterclass to bring everybody up to speed. So do consider upgrading your skill, time and money into coaching the right strategy. So don't listen. If you do listen, ask the right question. What sector is it? Okay, is it overbought or oversold? Those are the more intelligent questions you should be asking. All right. So that's how I started. I started with I think you've seen this before with Tom Williams in here, and he passed away. So right now, I'd like to invite you, some of those who are interested in our masterclass. If you are interested in the masterclasses type MC in here, I know I've been repeating it, but it's just part and parcel of what we do as part of the free service that we do for here. We just want to promote a bit. That's all. All right. So it's a proven way how I got educated, how Arif and Zach and some of our members here, like Dr. Derek Ma and also Ling Ling and all this. We all really need to go through this upgrading of a skill. Okay. So some of those people who have done very well are doing seminar also Sifu. They've gone through our programs. All right, we can see Nick and also Muhammad Asri Ahmad from the AA here. This is more from the Malay community, and also Chef Sam. They've gone through our program. They just don't come up suddenly like that. They go through a program where we train them. All right, we can say we are like the master trader, and then this is more from Singapore side, and there's a young chap there, JT Low, also a millionaire trading in there. So they all go through the same cycle that what we do, and now he's telling how I became a full-time trader, right? So you will see the kind of stories that they go through, all right? So this one, I don't think this is, okay. So let me just fast forward this one here. So the mistake I think most people make is get a proper education. Now, education doesn't mean you have to pay, all right? There is also free education. There is also guided education. There is also coaching, right? During this COVID, which is in here, try to move towards growing. I think that's very important too. As I said before, we are going to have this market moving up, grow, learn, right? If not, follow us, okay? So we are right at the market now. The market is going to turn, which I'll share with you in here. And some of you who are interested, and some of you did ask about the US market, which I'll talk about. We are doing a 8 to 10 August and the 12th, a 3-day masterclass. And those of you who are interested in the masterclass, there's a number on the right-hand side, or just contact Zach and we'll give you some information there. And it's a 12-month program. You can re-attend back. And a lot of things when you come up from the masterclass and what I talk about this, you will really understand this. My goal for you is that eventually, whether your amount is $10,000, $50,000, $200,000, $2 million, I'll help you to manage it, that you can manage it so much better. All right. Okay. So the best solution, like just like Tiger Woods, he also got a coach. I also got a coach, right? Zach also got a coach, and you also need your coach. It's just the question is how much you want to pay. You want to pay more or pay less, and whether they are supportive of the information that they're given in. All right. So have a winning system. We believe our systems is winning based on the product that we have. Smart Robie, you have tested it. We combine fundamental, technical, and also news-driven. That even we're able to work with some of the best broker houses in Malaysia. UOB Kay Hang are partnering with us for that one. All right. So if you don't have, download Smart Robie. And those of you who have downloaded Smart Robie, I appreciate if you can please go over to your Google Play Store or Apple Play Store and give me a feedback, please. Right? Because right now Google is complaining to me, Google Play Store and iOS, I don't have enough feedback. You know, the ratings. Okay, whatever ratings that you put in, happy or not happy, I and my team will attend to you personally. Thank you very much. Please go over to the Google Play Store and Apple Play Store to upgrade this. All right. So post-COVID, and our coaches are ready in here. As I said before, you know, we show you that we can make money, and we have done so. You know, a lot of the good picks inside there, FCPO and so forth, and also in stocks. We used to do the pre-COVID classroom. This coming August, unfortunately, because of the COVID-19, we can have only a small class. So if you are signing up for the MC, you will attend the Zoom one. Next one in October, if they open up, then we will do the physical class. I know many of you want to come for physical class, but I'm not really sure this round we can do it now. But definitely Zoom, you can attend as much as you can, just like we're doing now. Technology, not a problem, okay? The master class, is it for beginner? In a way, yes. The answer is yes. So we do a lot of them by Zoom in here, and we're covering US topic too. All right, US topic in here. There's a number that you can call. We do have a special price. For example, this one in here, and do call Zach if you're interested. If you're not interested, follow us again next Saturday. That's right. We'll talk about those stocks. All right. So the dates. So that's it for today. Some of you have some questions. Some of you want to know more. Yeah, the government are tightening SOP. That's right. They are tightening the SOP for it. So we all have to be ready lah. If not, we just go on Zoom. Most important is the if they're tightening again more cases, then you see rubber glove move again. Okay, thanks a lot, everybody. Each and all of us have a thing. So focus on the strategy. Okay, remember strategy 1, 2, 3, and 4. Your watch list. Your what is that? Your sectors. Right, and then if we do come for the masterclass, we can talk more, because some of you like Hari coming with the wife. I'm trying to get him up to speed, so when he comes in, he know what sort of strategy he'd use. Okay, at least he's up to speed. Then very quickly, it's just the market timing and all the tools inside there. All right. Okay. Thank you very much, everybody. Thank you. And those of you who are really expressed their interest on MC, which is the masterclass, I thank you for you, and I'll see you sooner, if not on Monday. That's right. Monday, catch me again for our this breakfast shows with Smart Robie. If not next Saturday, but this coming Wednesday, I will have another good topic for you, just like we did last week for the plantation. All the stock jalan already, right? Let's see. This Wednesday, I'll be doing another talk for you, and then on Saturday will be more of those stocks. With that, good evening, bye bye, and have a good day for the rest of the Saturday and also Sunday. I think many of you have family. Thank you for your time, and you took this important time away from your family to be with us, our coaches Zach and also and Arif in here. We make sure the time that you spend are well earned, because we cherish them, your time with us. Thank you very much. Bye bye.